Imagine living life without worrying about bills, debt, or running out of money. Imagine having the freedom to travel, work on your passions, and focus on what truly matters. That's financial freedom. And today, I'm going to show you exactly how beginners can start building it in 2026. Whether you're 20, 30, or 40, the steps are the same, and you don't need $1 million to start. Financial freedom isn't about getting rich overnight. It's about creating a system that allows your money to work for you instead of you working for money. It starts with understanding your finances, controlling your spending, and investing smartly. First, know where your money is going. Many people fail financially not because they don't earn enough, but because they don't track their expenses. Start by writing down all your income sources and monthly expenses. This simple step shows you exactly where your money is leaking and where you can save. Next, tackle debt. High-interest debt like credit cards is the biggest enemy of financial freedom. Let's say you owe $5,000 on a credit card at 20% interest. If you only pay the minimum each month, you could be paying it off for years and wasting thousands in interest. Focus on paying off high-interest debt first. Some people use the debt snowball method, where you pay off the smallest debts first for motivation. Others use the debt avalanche method, focusing on the highest interest rates first. Either way, reducing debt frees up money for saving and investing. Once your debt is under control, it's time to build an emergency fund. Aim for at least 3 to 6 months of living expenses in a separate savings account. For example, if your monthly expenses are $2,000, having $6,000 in an easily accessible account gives you security and prevents you from falling back into debt when unexpected costs appear. Now comes the exciting part, investing. Financial freedom relies on putting your money to work. In 2026, there are several ways beginners can start. First, consider low-cost index funds and ETFs. For example, investing $200 a month in an S&P 500 ETF could grow to over $200,000 in 20 years, assuming average market returns. ETFs are great because they diversify your investment across hundreds of companies, reducing risk. For those interested in passive income, dividend stocks are a fantastic option. Companies like Johnson & Johnson, Microsoft, or Procter & Gamble pay consistent dividends. Reinvesting these dividends accelerates your wealth growth. For instance, if you invest $5,000 today in a dividend stock with a 4% yield, you could earn $200 annually, which grows every year as you reinvest. Cryptocurrency is another option, but it comes with higher risk. In 2026, crypto isn't just about Bitcoin or Ethereum. You can also earn through staking and yield farming. For example, staking Ethereum on a secure platform can earn you 3.7% annually. Remember, only invest what you can afford to lose, and always research the platforms you use. Diversifying between traditional assets like stocks and new digital assets can balance your portfolio. Real estate is another powerful tool for financial freedom. Even if you can't buy a property outright, consider real estate investment trusts, REITs. They allow you to invest in properties without managing them yourself. For example, investing $10,000 in a REIT that pays 5% dividends could generate $500 annually in passive income, which can grow over time with reinvested earnings. Budgeting and saving are crucial throughout this journey. A simple approach is the 50-30-20 rule. 50% of your income goes to needs, 30% to wants, and 20% to savings and investments. For example, if you earn $3,000 a month, $1,500 goes to essentials like rent and bills, $900 to discretionary spending, and $600 directly into savings and investments. Over time, this disciplined approach compounds your wealth. Let's talk about side income. Relying on one source of income slows your path to financial freedom. Even beginners can start small. Freelancing online, creating a digital product, or renting assets like your car or home can generate extra income. For example, earning an extra $300 a month through a side hustle is $3,600 a year that can be invested. Compound that for years, and it accelerates your financial independence. Another critical factor is controlling lifestyle inflation. Many people increase their spending as their income grows, thinking it's okay to splurge. But if you keep your expenses modest and invest the extra income instead, your wealth multiplies. For example, if your income increases by $500 per month, but you invest that instead of spending it at a 7% return, it could grow to over $50,000 in 10 years. Insurance is often overlooked but is essential. Health, life, and disability insurance protect your finances from unexpected disasters. Imagine a medical emergency without insurance. It can wipe out years of savings. Protecting yourself ensures your financial freedom plan stays on track. Finally, mindset is everything. Financial freedom isn't just numbers, it's habits and discipline. Start small, be consistent, and avoid get-rich-quick schemes. Visualize your goals, whether it's early retirement, travel, or starting your dream business. Take action daily. Even small steps like automating savings, investing consistently, or learning about new assets make a huge difference over time. Remember, financial freedom is achievable for anyone willing to learn and act. Start today, even if you can only save $50 a month. Small steps lead to massive results over time. Track your progress, celebrate milestones, and continue learning. If you want more tips, strategies, and examples to reach financial freedom faster, hit the subscribe button now. Comment below which step you're taking first: budgeting, investing, or starting a side hustle. And let's grow together in 2026.